If you've ever looked into making money on the side or even starting your own business, you've probably come across someone suggesting that instead of going through all of that hard work, why not just take some of your cash and make money in the stock market? All you need is a laptop, your phone, and an internet connection, and you're good to go. A world of Lambos, riches beyond your wildest dreams, and the lifestyle you've been dreaming of all awaits you. There are so many channels on YouTube dedicated to this single topic, and it's had a huge spike of interest over the past couple of years as people were locked away in their homes with extra money to burn from government stimulus and nothing else to do once they'd burned through another binge-watching session on Netflix. It seems all too good to be true, right? You get to skip the years of investing every month into index funds or looking at old boring stocks that pay dividends, and instead you can retire in your 20s and 30s and work from a swimming pool instead. Without diving into all of the wild claims made by these individuals, if you know me by now on this channel, I'd rather skip the BS and go straight to the data and the evidence to actually find the answer to the question for you if day trading is really a profitable strategy to make money. After all, so many people try it and apparently it's easy to learn. I want my Ferrari already, so let's dive into the data. I remember when I first started looking into the stock market and investing, and like a lot of people, I was sucked into the idea that you could day trade on the side. There were countless platforms you can do this on, offering you all of the charts and the data. It all sounds great, you just need a computer and an internet connection and you're good to go. At one point, I do remember being at work in the office and I was actually trying to make some trades myself. Let's just say it didn't go too well. Academics have done a lot of research on this topic to find out whether or not day trading is a profitable activity and actually worth considering for those of you sick of your current job. After I finished reading them, I've got some interesting findings for you which I think look pretty conclusive in one direction. Let me show you some of the data from this first study that's from Sao Paulo University in Brazil. In this paper from 2020 titled Day Trading for a Living, the authors looked at the futures trading market in Brazil from data that they were provided from the equivalent of the SEC. I won't butcher that pronunciation here. Anyway, it's a big market for futures, apparently third in the world with around 700 million contracts traded annually, so there's a lot of data to look at. All of the information that was collected was analysed to see how long the traders were in the market for, and most importantly, how much money they made once fees and commissions had been taken out. Interestingly enough, here's what it looked like from a time perspective. They say that, and I quote, out of the 19,646 new day traders, 1,111, that's 5.7%, day traded only one day. 9,978, that's 50% between 2 to 50 days, 3,100, that's 15.8% between 51 to 100 days, 2,738, that's 13.9% between 101 to 200 days, and 1,168, that's 5.9% between 201 to 300 days. And then finally, 1,551, that's just 7.9% for more than 300 days. So clearly many people don't try this for a very long amount of time and they give up most of the time too within just a couple of months. And only that 7.9% of the total number of new day traders actually make it to more than 300 days. What's even more interesting is seeing how these people got on. Surely the longer they tried it, the better they got right, or at least only the profitable people remained, kind of like a Squid Game or Hunger Games style market? Apparently, they found the opposite. They say the probability of an individual exhibiting a positive profit monotonically decreases with the number of days he or she trades. Patterns like this are usually found in gambling activity such as the casino roulette, where the proportion of successful players also monotonically decreases with the number of rounds played. That's a hard word to say, isn't it? Well, that's still not good. They keep trying to day trade. Presumably they're trying to get better. At least some of them must be making something right. Please tell me some of them made money. Don't worry, some people did. Here's the conclusion. Considering the performance net of exchange and brokerage fees, we found that 97% of all investors who persisted for more than 300 days lost money. Only 17 individuals, that's 1.1% of the 1,551, earned more than the Brazilian minimum wage, that's $16 a day. Only 8 individuals, that's 0.5%, earned more than the initial salary of a bank teller, that's $54 a day. And the individual who earned the most earned $310 per day on average. Well, that's not a good start, but I know what you might be thinking. Come on, you can do better than Brazil. That just sounds like a weird market. What about some other major stock markets? All right, what about this one next? Now we're looking at data from the Taiwanese futures market. This paper is called The Profitability of Day Trading and the Characteristics of Traders, Evidence from the Taiwan Futures Market. I don't think that would work as a very good title on YouTube, would it? The idea here is a similar one. They really wanted to look into the profitability of day trading, who was making all the money, if anyone at all. A couple of interesting findings in my opinion here are firstly, that all of the individuals and institutions involved in the stock market, the ones doing the most day trades were the individuals, not the market makers, not the banks, not the institutions. Here you can see that 60% of all of the day trading is made up from the individuals themselves. This is interesting in itself because does that not suggest that if it was so profitable, wouldn't the institutions be the ones making the major trades? Another interesting finding here is who actually is making the money and how much are they making. Here in this table is how much percentage gain was made in a single day. Pay attention to the two different columns here, one with a gross return and one with a net return. As we said earlier, the gross return is not taking into account any of the fees or taxes that are imposed on traders. It's only the net returns which end up in their back pockets. Interestingly enough, out of all the people involved in the day trading industry, the gross returns are actually positive for 3 out of 5 subcategories. And unfortunately, the individual investors are not even positive from a gross perspective. Also notice something here which is going to be a really key topic in the final study we talk about in a moment. Look how small those figures are from a daily gain perspective. There's nothing in the single or double digits here. All of these gains are below 1%. Once we account for those fees and charges, unfortunately, as we can see here, nobody makes any money apart from a small fraction made by the market makers. Where are these promised returns where you can make 10%, 5% or even 1% in a day? I thought this was an easy way to make money, guys. Now, maybe I'm going to have to work a proper job for a living. Unless we make a course telling everyone how good day trading is and giving them loads of strategies that definitely don't work all the time and forget to tell you that you need a huge amount of money to begin with. Actually, let's just check, 2 seconds. Okay, so we'll put $1,000 in and we'll say we'll get 10% a day because that's not really much money, is it? We won't include weekends because no one wants to work weekends. We're free spirits now. We work where we want to. And we'll just do it for a year. So let's just let's calculate that. Millions, billions, $63 trillion. I'm pretty sure that's almost the entire GDP of the world and about 3 times the GDP of the US, but guys, it's only 10% a day. Thought that was easy. Okay, what about this last study that's by some pretty famous faces in this space, and I've used them before in some of my previous videos. This paper is titled The Cross-Section of Speculator Skill, Evidence from Day Trading, and it's by Barber, Adine, Lee, and Liu. They also looked at the data from the Taiwanese stock market, but this time the entire market, not just a futures section. This study probably has one of the largest data sets that I could find for any study into day trading that there is out there. This data comes from 1992 all the way to 2006, and they've been really smart about how they put this work together, even trying to separate the best traders from the worst traders across multiple years to really find out if the best ones that keep performing are doing it consistently. Alright, show me the money, where are the Lambos? Here are some of their main findings. Firstly, and I quote, consistent with prior work on the performance of individual investors, the vast majority of day traders lose money. In the average year during our 1992 to 2006 sample period, about 450,000 Taiwanese individuals engaged in day trading. Among thousands of occasional day traders in the average year, 277,000 individuals engage in day trading in excess of 600,000 Taiwanese dollars per year, which is about 20,000 US dollars. And about 20% of these day traders earn positive abnormal returns net of fees, that's commissions and transaction taxes. Okay, so we've got some winners here. Some accounts are making money, but how many of them are making it consistently and what kind of returns are the absolute best investors making? Let's have a look a bit further. Firstly, they say, we document that only the 4,000 most profitable day traders, that's less than 1% of the total population of day traders, from the prior year go on to earn reliably positive abnormal returns net of trading costs in the subsequent year. Okay, not great, but there are some hope, right? The top 500 day traders based on prior year ranking earn gross abnormal returns of 61.3 basis points per day on their day trading portfolio, while the tens of thousands of day traders with a history of losses in the prior year go on to earn gross abnormal returns of negative 11.5 basis points per day. Okay, just to keep things simple, basis points are fractions of a percent. Just like how the Federal Reserve moves up interest rates, so 61 basis points is 0.61%. And then once you've taken out these costs and taxes, the net take home for those best top 500 traders is 0.37% per day. Seems very far away from all the glamorous lifestyle that was promised. What's interesting though, is that there might be some common themes amongst the best traders. They find a couple of bits of information here which you might find interesting. Firstly, aside from past performance, the most important predictor of future performance is the concentration of trading in a few stocks, which is consistent with the hypothesis that successful day traders focus on a few stocks in an attempt to garner an information advantage in these stocks. Okay, interesting. They seem to like a few individual stocks, and secondly, successful day traders appear to profit predominantly from forecasting short-term price movements in periods when information asymmetry is high, e.g. around earnings announcements or in hard-to-value stocks like small or volatile ones. This evidence suggests that day traders either possess private information or react more quickly to public information signals in their trading strategies. Make of this what you will, but they're essentially saying here that traders either have insider information and are trading on that, which is completely illegal, or somehow they're just quicker to react to that information. And I don't know about you, but unless you run all of your trades using a bot and you've got some smart algorithms looking through earnings reports and trading based on processing information really quickly, you won't stand a chance. So don't even try, no matter how fast you think you can read or click a mouse on the order button. The bottom line here is that just a tiny number of people make the money, and the 500 top-ranked day traders go on to earn daily before-fee returns of 61.3 and after-fee returns of 37.9 basis points per day, so 0.37.9%. From looking at this data and a lot more, it's easy to see why so many platforms spend so much money on advertising and trying to get you to spend your money on this crazy get-rich-quick scheme. It explains all of these YouTubers and fake gurus who sell you courses claiming to tell you how to become a profitable day trader, when in reality, they're making far more from selling their courses to you than they could ever make day trading, even if this happened to be the best in the business at what they do. They know that the cash flow from selling ads, sponsors, and courses is a lot more reliable than trying to trade in the market, and far less risky too. Don't fall for the BS, avoid this like the plague, although I know that for every new generation of potential investors, a lot of them will probably fall into their traps and they'll only learn the hard way. Some things never change. People want to get rich quick, and I don't think it will ever change anytime soon. If you've got any confessions to make, feel free to drop a comment below. We can have an amnesty if you've ever been tempted to day trade, or maybe you've lost some money yourself. Anyway, on that note, thanks so much for watching. I'll see you in the next one. And as always, happy investing.